But let's move on and talk about the first guest that we have on our show today. Shachindra Nath, who's the Executive Chairman and Managing Director of UGRO Capital, joins in to discuss the quarter gone by in detail. Remember, this is a recent listing on the bourses itself. Thanks a lot for joining in. You know, I'm just looking at your numbers, and a big jump is what we've seen in your AUM. 105% jump year on year and 19% jump quarter on quarter. All of this at net interest margins of over 8%, closer to 8.5%. Do you think this is sustainable, and who are these people you're lending to?
As you know, Mangalam, UGRO is dedicated to small business financing in India. This business was set up in 2018 when we acquired a small listed company and raised around 1,000 crore of capital. We raised another 340 crore of capital just now. The jump which you are seeing is a fact of the base which we created. Our digital technology infrastructure, our physical infrastructure. So all through last 4 years, our operating infrastructure has grown in many-fold. Starting in 2022 with 8 location, 200 people, we are now 100 plus location and roughly around 2,000 plus people. So the base which we created in last 2.5, 3 years is now delivering the AUM number. With respect to, I think so we exited March at around 600 crore per month. When we are, hope that for the year we will continue to maintain that monthly run rate. This year we are not increasing our OPEX infrastructure, which means we are not increasing number of branches, people and all that. We want to deliver to our full capacity. So both on the AUM side, I think so we will touch roughly around 9,500 to 10,000 crore. But more importantly, the bottom line would improve at least 2.5 times of what we did in year FY23.
All right. Hi, Mr. Nath. Good morning. Thanks so much for joining in. So we have got the AUM growth number that you're looking at. You believe this sort of a growth is sustainable. What about NIMs? Could you tell us what is your current cost of borrowing? How does it compare, say, with the past quarter? And what's the broad number we should be working with?
So look, unlike most of the other lending institutions, our cost of borrowing have remained stable. This is again for the fact that in last 3.5 years, when we started, our number of lenders were, few, roughly around 5-7, which is now at 63. Our co-lending partners from 1 to have moved to 9. And that's why, we have seen only a 30 basis point increase in our cost of borrowing over last 5 quarters. And we, for the current year, we presume that our cost of borrowing will remain stable. It will not go up. And depending upon the rate cycle, which I think so by last quarter should start, reducing, we will see the benefit. But for the purpose of operating performance, we are hoping that our cost of borrowing would remain stable.
Mr. Nath, what you're saying sounds amazing in a credit upcycle. However, the down cycle, this may perhaps prove to be a bit of an albatross as well. You are guiding for AUMs closer to 10,000 crores by the end of this year, with the net profit more than doubling. 2.5 times is the jump that you're anticipating in the net profit. Just wanted to understand how much of your book has seen one complete credit cycle. I mean, is there a risk of these people who you've lent money to not paying back?
Mr. Nath, we're unable to hear you, sir.
Hi, can you hear me?
Yes.
Go ahead, sir.
Please go ahead.
Yeah, so we focus on M part of MSME, which means our target customer segment is 10 lakh rupees turnover to 10 crore rupees turnover businesses. Second, we are India's first completely data-driven underwriting platform. So our Grow score uses GST, banking and bureau, and the algorithm says yes and no to the customer. And we are a true cash flow underwriters when it comes to the underwriting the MSME. I think so there is a myth generally believing that this is a very weak segment. The entrepreneurial spirit of small businesses and their ability to survive through cycle is far more stronger. In past, historically, you have seen volatility in the credit performance because legacy lending organizations were underwriting on the basis of legacy cash flow versus we do on the basis of true cash flow. We have seen since we started in 2019, we have seen 3 credit crises and also have seen COVID, but we have maintained our, the portfolio performance all through our stage. Our stage 1 asset is 96-97%. Our collection efficiency is north of 98%, gross NPA at 1.6, net NPA 0.9%. More importantly, the parameter on basis of which, we are very confident, our login to disbursement is roughly around 50%. So for a 600 crore of monthly disbursement, our system originates roughly around 2,400 crores of loan, and we do an average ticket size of 17 lakh. So you can...
That still doesn't answer, all that's well and great. That still doesn't answer how much of your book has already seen one credit cycle.
No, so I was trying to answer that itself. We have gone through with worst of the time, and roughly around half of our book has gone through the entire COVID cycle. And if you look at our COVID, we started with the restructured portfolio of 128 crore, which is down to roughly around 60 crore, 1% of AUM, and all our restructured book is standard and now paying. For a new company which is 4-year-old, the lead indicators, what indicates what the future would be. So we maintain on that basis.
All right. And final question then, your cost to income ratio saw a big decline QOQ and year on year as well. You said that it's on account mainly because of your fixed costs being stable right now. What is the target here? Will it stay sub 60% at current levels, or is there more room for your cost to income ratio to improve further? All right, I think we've lost that connection with Mr. Nath, though a conversation for another day. For now, he's extremely bullish on the prospects of the company, targeting 9,600 crore plus in terms of AUM, with the profits doubling more than 2.5 times in this year itself, hoping that the NIMs maintain around current levels itself.